Batch 5, here we go. So first one is Pfizer, and revise my levels here. I'll do the intermediate ones after, but wanted to point out the demand zones. So before today, or before the last push down, this was the demand level that didn't hold, and the next ones were this in the 35-36 area, and now we've gotten to the 44 one, and we almost made it, and we're finally seeing a bounce and a breakout. Still very bullish on Pfizer. Let's draw intermediate levels as well. One would be here, and we have a couple of smaller ones like gap start and gap fill. And above probably more like this to include this week as well. So like this. Yeah. This looks better. So basically we are testing the previous major low. If we recapture this, and doesn't mean it happens immediately, like we can do this, but eventually we will recapture it and start going up, and that's what happened with every level. I think the reasonable target is this 38 area. Anything above that is a bonus. I think it goes higher to the 40 area, but that's irrelevant. Like you can take profit at 38, and we'll see. PGY, Pagaya. I don't remember what these guys do. Fuck. This was a SPAC apparently from this part here, and we have the low from the SPAC period. Gap fill. We are nowhere near that. Actually, like this. Quite impulsive, still has a lot of room to go down in my opinion. I could see it going back to this area here, to 1.3, 1.5. It it doesn't have very well established ranges. Maybe something stops on this. So probably more to drop. What's the lower time frame look like? Basically watch this level. We bounce, we go back here, probably get rejected again. We go below and we continue down until the next zone, which is 1.4-ish. Palantir. that. Also above. Nice pickup in volume on Friday, but wouldn't say it's bullish yet. Yeah, not yet. It still looks like it's under the downtrend. It should do this. Then we see what happens there. So got strongly rejected, got back here. Actually, I could see it doing like a head and shoulders as well. I don't remember. IONQ was the one. So doing something like this. And the level would be here. So here, reject, loses low, goes back to the 9 area. The head and shoulders. Yeah, we get a bounce here. If the drop happens first, probably a bounce at 12-ish, 11.8. So either this move up or this move up and then it goes back down. See that it has a precedent for chopping in this area. So if the low doesn't hold from Friday and it goes down, it most likely going to chop around here for a while until we get the direction from the market. PPLT, what the fuck is this? Physical platinum. What does platinum look like? Looks almost identical. Okay, so it doesn't matter what we look at. Let's measure see if it's a double, approximately. So this is fine. What else can we look at? Trend is this, got rejected, now and pushing back down in strength. Bounce, couldn't even get to the high level and gets rejected. Makes new low, now back test, and it wants lower. Either this or this. A recapture would be similar to a fake breakout. So if it recapture, it's probably gonna attempt to break out and go back here. But doesn't look like it will recapture. Divergence quite a large one on daily. That's not necessarily uh, with an immediate effect. Like it could do this, then do this, and then up. Maybe for the bullish case. I don't like the fact that it went below the this trend line. But if it recaptures it, something similar to this. Peloton. Earnings next week, so it depends on earnings. If we make new lows, target is 4, 440, 430, 450, something like that. If we bounce, we bounce. Nothing I can tell you. Wait after earnings to take a position. I would not recommend gambling on this one. But if for earnings we both do not make new lows and do not go up, this is bullish because it's consolidating at the bottom without going lower. This is similar to Disney. So if it's not bearish, then it is bullish. And I would, if we don't get the crater for earnings, it's probably a good idea to go get something long. Not for an immediate move up, but in a couple of weeks maybe it starts going up. PayPal. Okay. Higher to catch this. Higher as well. Here, some demand. And if that doesn't hold either, then here, 60. So earnings dump and new lows. This becomes a failed breakout. Eight new lows. This is, what's this? -6. And on high volume. So we dropped on earnings, then slow bled, then the next move was impulsive as well, and with increased volume. Nothing here says it's ready to stop dropping. Even though we're in the demand zone, we need an even lower one. Well, the best one by far is at 43. This is a truly spectacular one, but we need to go even lower than where we are now. So 54, or actually, no, it's still this one, but it can go as low as 50, 58-ish. When do we buy the dip on PayPal? And we need to establish a target for the drop. We had one big range here, which is a double up of this, in which it stayed for a long time. What if we double that one? It's not going that low. So maybe it's this plus this, so 50. The only thing that looks decent is RSI, but I'm not liking it at all. Curling down a bit on daily. I don't think it's worth bottom catching it. You see how you see this here? Very, very similar. And there's always this the temptation of another push down. And we have this. It looks like a recovery candle, like this one here, the green one, like this handle here, and then it still dumps and goes a bit lower. And it, I think it's very likely that we have the same kind of structure. We could argue that it's this candle that is this one, but no. From the lower time frame, it looks rejected to me, and I think it does this, goes to 55. Next supply zone, demand zone, sorry. I don't think there's a lot of volume either in this area, so risk is very large. Let's put the visible profile range, and you see that there's virtually no volume pocket in this area. We just entered, or we're very close to entering no man's land for good, like lowest volume because it went very quickly through this. So there is no residual demand here. Same here, it didn't spend a lot of time to uh, for people to get a chance to put in orders at those values. So PayPal is pretty risky now. Basically dropped to 53, and if that doesn't hold either, another surge down to 43. This is the true demand zone, and it seems very unlikely right now because how can PayPal drop from 60 to 43 in 2 weeks? Like after already dropping a ton. Like we're not at all-time highs. We're in the dumpster. But if conditions happen, it it will happen. So right now 54, 55, like I said, or 53. This whole area here. So it's going from 52.92 until 54.61. This is the demand area. And if this one doesn't hold, and we are in a partial air pocket. If we go below this point, we are in a true air pocket, and it will just crater down. Like this. I don't expect a strong rebound from it yet. Still expect it to be weak. Like goes down here, consolidates, and then still flushes. We will see. Like again, not my opinion is not the end all be all, but PayPal not not looking very strong. Okay, next, Qualcomm. Demand here from this strong rally. Out, then a counter breakdown. Seem pretty well drawn. Qualcomm, this is the strong supply zone, or demand zone. and if not this and this, but I don't see it going below 93. Intermediate level, so one is here, is around here. Bounce was pretty anemic. This is actually a red candle, minus 8%, but it's green because it bounced. And we are under the influence of this impulsive move down. And we kept bleeding at a quite rapid pace. We are due a technical rebound, but I would not expect this to be a reversal, more of just a rebound. So something like this, then continue down to this demand area, and the ideal buy point is the 100, 105 area, and then we can be bullish for the longer term. Yeah, that's kind of it. I don't see it being strong yet. Like same with PayPal, it wants another leg down to get to the bottom, either at 107 or 10, 103 or 105. We're looking to see something like this, meaning green volume bars that are actually green candles, not this pseudo green candle, but it's actually red. This is tied to China weakness, by the way. So unless China puts up some positive news, no recovery for Qualcomm. RH finally with the breakdown. We haven't even gotten to earnings. See that Friday had a bit of a pickup in volume. Same story. Like expect a bounce because oversold. We dropped too fast, too quickly, too much, too quickly, and then continue down to the actual demand zone, which is this, and then bounce and potentially go retest the highs. This is weak support. Then the real support is lower at 342. Somewhere in this area, then we can bounce. RIVN. Let me draw clean. It's too much. I think like this. Now let's do the double up test. Awesome. Okay, so got to the upper target, then getting rejected. Don't think it should be a bit higher. It's it's fine. Whatever. Getting to a support area. Let's do some intermediate levels. First one is this. Lower these two. dropping, volume is weak, no sign of reversal yet. It may seem this is like an S drop, like this, because it's not curling up yet. What I want to see for more bullish bias is basically some downward wicks. Like imagine this was at the bottom, and we get this 1, 2, 3, 4, 5, multiple rejections of the new lows. Then we get a push down that quickly gets reversed. So right now there's a form of rejection in that there are some green candles near the lows, but not quite there yet. So I wouldn't expect a V reversal soon. More consolidation, probably more of a bit more slow bleed like this. And once we get below this thing, if we get some rejection candles with wicks, that would be sort of bullish, and we can talk about at least a retest of the 23 level, 24 level. If not, this can drop some more. I would assume 16 is the target if this doesn't hold at this point. RTX. I don't remember the news for RTX when it dumped like this, but the dip was bought, and lo and behold, it was in a demand zone. This was the beginning of the demand zone. And it goes down to here. Establish the horizontal range. Okay, let's see the top. This, I think. Then the midpoint would be okay. The thing with this kind of lows is that the low gets retested. If I turn out volume, you don't want to be buying long wick dump candles. It's very often a retest scenario. Like let's look at Cree, which had a similar setup. Dump, green rejection candle, even though it was minus 12. It bounced a lot from the initial drop, but then the low was retested, chopped around, dropped again. This was a longer week candle as well, retested again, and so on. So you don't want to be seduced by long week candles. You want to buy the huge drop and then for that bounce, because the bounce is quite large. If you would have bottom ticked it, it would have been 9% almost. But right now it's weak. It's back below this level, and I would expect we get sometime in the near future, I'm the next couple of weeks, uh, a retest of these lows. And then we can bounce, we cannot bounce, it depends. Depends how the reaction with meeting the lows is. For example, with Cree, it was a slow bleed and we made even lower lows. With this one, I think it's going to be stronger. So I would expect at least a retest of 85 from 80 and potentially even break out and start going higher. But we'll get to that in when we get to it. Next stop should stop at 93, like we have the pre-COVID high. I do think a rally is coming, and we will get to at least this. And then it's very likely that this becomes our chop range, some sideways move. What if we make this into a channel? This would be the midpoint of the bigger one. $60. Ideal buy point is 60 for this one. Okay. SAVA. Let's clean this one up as well. My pick because it looks like it's getting to a buy point. Demand zone starts here and ends here. Point. It's about right. We can probably move this one higher. Include this low as well. And then it would fit. Yep. Okay, so we are in the overshoot range. It doesn't hold. We start another leg down of the same size as this one, which would take us to 10-ish. It's on my list because I don't think it goes that long. I mean, I think it's overshoots, but the buy I think is this trend line here, and then it should chop some more, recapture, and when it recaptures, it will go for the highs here, maybe even does the whole move up back to 33. It has the look of a week of spring as well, similar to Moderna. Like we dropped twice, tried to go up, rejected, then slow bled, and now we have a push down similar to a spring in which it goes lower than initially expected. It takes out the last low, and then it bounces strongly. So I like it for a speculative position longer term. SE dumped for earnings, if I remember from a couple of days ago. Holy shit, minus 28. And has a slow bleed set up. Is this in new territory? This one, 31.44, is the high quality demand zone. 29.81, 31.44. This one should be decent as well. It was only tested once and in 2020. Now, problem is, it's gonna be hard to recapture all these levels. So the first one is this, then the gap start, this one. Yeah, it's gonna have a hard time. Okay, if we bounce briefly like this, we can open the door for more slow bleed. And the slow bleed takes us to this 29.81, 31.44 area. This is a buy, and we should expect it to probably chop in this range until 45, but from 40 to 45 is 50%, not too shabby. We can take this when if we get to it. Uh, this rebound can be actually bigger. It can go as high as 45, but I doubt it. I think it's going to be feeble, and we get a slow bleed, followed by a last flush down. If we recapture, like look for both an overshoot here. Don't take a trade blindly when we go above it, because it's very likely to get rejected like this. It got to the level a second time. It looked like it was breaking out, but then it didn't. And when it didn't, it went back to the other side. So it can the move up and rejection and when go to new lows can take many forms. So be careful around it. Like I said, the big buy point is this one, 40. That's not a lot to say about it. Solar Edge. Solar's getting dumpstered. I talked about it a bit yesterday uh, in the what's it called end phase video, or in the F phase part. Holy shit, this looks bad. And solars are getting hurt badly by interest rates. I don't even know what to tell you where to buy, honestly. Like these things can crater a lot. First of all, we lost this big consolidation, and if you remember from what was TSM, Amazon, we'll look again. Amazon, this consolidation, IWM, this consolidation, TSM, this consolidation. When we lose this level, we're fucked. We go down like a rock. And SEDG just broke this level. And yes, maybe we can get a retest as a last hurrah. Maybe if the market rallies, we go to 200, 207. But don't count on this becoming bullish without going for a much lower low. And let's assume we do the bounce. Sorry, I'll delete this one. Let's assume we go for this bounce here. So we go for this bounce here. When we drop to this level and we lose the horizontal level, all hell breaks loose. Like we drop probably down to here. I would not be surprised to retest the COVID lows. Maybe not those lows, but this would be the high quality demand zone in my opinion. So 91, 92. And in in this case, even because it's so weak, or solars can be so weak, it could be this range. So 91 to 75 is all. It's difficult to evaluate when it will stop in this range. It could just weak it down to it to 91 and just bounce strongly, or it can go as low as 75, and the situation wouldn't change dramatically. And there are intermediate supports along the way, like we have this one, which is where we are now. We have this one, which is a bit stronger at 147-ish. But I think we double the range. This. Let's see where we get by doubling this one. We get to 71. Is what it is. Stay the fuck away from solars until JPOW turns the printer back on, or at least cuts rates. Okay, batch 5 I believe is done. One more to go and we're done. Have a good one. Bye bye.